Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Gary Wagner, the editor of goldforecast.com. Glad to have you back, Gary.
Great to be here again.
Gary, the big question out there is where is gold and silver going in 2023? What is driving the price right now, and where do you see it heading?
Well, what has been driving the price of gold, silver, and the dollar, as well as other currencies,
Mhm.
is action by the central banks worldwide. The Federal Reserve is what people here in the United States, as well as all throughout North America, meaning Canada, have focused on. But yet, Britain, for example, the Bank of England has done 13 consecutive rate hikes. They're up to 5%, which is not far off where we are, which is 5.25 to 5.5. So while we have been ratcheting up rates and focusing upon that, it's the relationship between the other currencies that compose the dollar index, and the dollar is what we need to be looking at, because the dollar has really been falling out of bed in terms of value since about September of last year, when it hit a peak at 114, and now it's right around 101, 102.
hmm So what happens with Powell? Is he trapped? Like, what do you think is his next move, and how will that affect the dollar and precious metals?
Well, he's only stated three times in the last week what he plans on doing, beginning with his press conference at the FOMC meeting last week,
Right.
and then two testimonies, both Monday and Tuesday, or Tuesday and Wednesday, excuse me.
hmm
He has said that the majority of Fed members have overwhelmingly said that they should continue to raise rates and to expect two rate hikes. And then when one of the questions came in, well, do you think you'll do something like cut, or do you think you'll ease off the pedal? He said, he reiterated it in a kind of a comical way. And that he said, as I said, a vast majority of the members are approving two rate hikes. So I think that they'll raise rates two more times this year by
And
a
what
0.25% each time.
And
What he
what happens
hasn't
when they
said,
pause? Sorry to cut you off, but what happens when they pause? Because a lot of people in the precious metals community, even yourself, Gary, we think that the second the Fed pauses or pivots, then precious metals will take off. So do you think there'll just be two more rate hikes and that's it?
I think that there will be two more rate hikes this year.
Mm,
I think that there are a total of three or four FOMC left this year. There's a total of eight of them altogether each year. So, which means if they're going to raise rates and there's three or four left, there's going to be two in which they pause. And because of that, I don't think a pause is going to be a signal to metals traders, let's hop on the long side, because what precious metals traders want to see is a rate cut, not a rate pause. Because
right.
if they pause rates here, they're still elevated above 5%, which means there is a real cost of borrowing money on one side. But more importantly, it means that investors can get a reasonable guaranteed return of 5% plus in government debt instruments, not only here, but in Europe. So it kind of takes away the allure of the precious metals.
Absolutely. And we've seen now the past month or two, recessions being called out in New Zealand. Germany just said they're actually in a recession. What are you watching as this recession heats up? And obviously, we know in the United States they changed the definition of recession. So, what are you watching in the US?
Well, that's the quagmire. I mean, it used to be, and if they've changed it, it is no longer two consecutive quarters with a declining GDP.
hmm
The thing about what's going on right now is the economy, even though the GDP is contracting, consumers are spending a huge amount of money. There continues to be a lot of revenue coming into these companies, creating a robust GDP. And that's the quagmire. How can you have consumer spending rising, more people spending money, and a GDP that's declining? So we need to bring an economist on to explain that one.
You sent me a few charts on the US dollar index futures. I'm gonna pop up one right now. This one is the what is concerning you here with the
Well,
US dollar index?
the one that we're looking at is the dollar index. There's two lines. The dark blue represents a 100-day moving average, and the green line
Hmm.
represents the 50-day moving average. And we can see that the dollar plummeted through there. Not only that, it moved through a 50% retracement. The retracement data set that we use goes from 89. So let's uh, rise it up to 90 to 114. So
Right.
that's a 25-point spread, which represents a 25% variance in strength or weakness of the dollar compared to other currencies. So what it shows is a tremendous decline in value of the dollar as it compares to the euro, the yen, and the other four currencies that compose the dollar index. A tremendous decline. That decline started, as I look at that, in September, and it does correspond to when gold and silver kind of topped out, although the most
Right.
recent top came in May for gold and silver and then declined. So there actually is a lag.
Absolutely. And I think one of the biggest questions out there, Gary, is have we made it through the worst of the banking crisis? And what concerns you in that sector right now? And could it even that contagion spill over to the commercial real estate side?
If it is going to, it's either not being reported or I'm not seeing it. It
Right.
seems as though the banking crisis was contained to 2 to 4 banks, and whether or not that moves into the real estate sector. And obviously, that would be a logical place because you're going to get a decline in new mortgages with rates moving up. You're not going to have motivated sellers who are sitting at 2 and 3% with their mortgages. However, the most recent housing report saw a 21% increase in new housing builds in May.
I seen
We're
that.
getting a lot of data that not so much is conflicting, but we're getting gold, the dollar, and silver all declining at once. Typically, you have an inverse relationship between a falling dollar and rising gold and silver prices. That tends to happen, well, simply because it's paired against the dollar. But when you add in the complexity of the other currencies, the dollar index is kind of paired against, it becomes a matrix rather than a simple black or white issue.
With all these uncertainties in the market that we're seeing, though, in the past couple of years, everything that happened with lockdowns, how important is it to own some physical gold and silver, Gary?
Well, I look at precious metal purchases and accumulations as a long term investment.
Hmm.
I'm not trying to speculate what it's going to do in 3 months or even in a year. I accumulate, I'm a buyer and not a seller of precious metals in terms of physical accumulation, not pricing for trading.
Hmm.
But in terms of physical, if you dollar cost average, I happen to think it's possible that we will see silver move down from here. It ran through a critical price point when it broke recently below the 100-day moving average. Because as a market technician, which is primarily what I look at, if gold or silver are trading above, let's say, a 50-day moving average, it
Hmm.
means that on a short-term basis, it's bullish, below is bearish. 100-day is the intermediate, and 200-day is your long-term view of the market. We are still above the 200-day moving average in both gold and silver, but we've broken below the 100-day in both of those precious metals, which tells me that we are no longer in a short-term a bullish scenario, which you don't have to look at a chart to know that. We've seen it go from $19 up to what, about 26, and then literally fall out of bed,
Right.
moving, through 25, 24. I think right now we're sitting at 22, 28. Now that's the futures price. So spot's going to be a little bit below that, closer to $22. And so I'd like to tell you, well, technical support is at, and the problem with saying that is this is a news event driven market. As long as there is talk about raising rates, as long as the higher level of interest rates is an inflection of what the central banks are doing across the board worldwide, it could pressure silver to at least maintain its current level, for gold to maintain its current level, or to track lower. Now, does that mean we couldn't see it pivot and turn to the upside? Absolutely.
Hmm.
But what would it take to do that? All things being equal, until something newsworthy goes into the news cycle itself, there's going to be a reluctance to move the precious metals higher. We could see it trade within a tight range. That's what we saw it doing a few months ago. It was tracking within a range. It would, with silver, it was hitting a high of around 24.50 to 23, and
Right.
then it broke hard, especially a few days ago. Once it went through the 100-day moving average, that sent signals to technical market traders to either not accumulate if they're purchasing physical, or to sell the market if they're working with futures.
Absolutely. And recently, Gary, I know this is just moving on a little bit to de-dollarization and the US dollar. People have been talking a lot about the US dollar dying. Do you think that the Chinese yuan or a BRICS nation will end US dollar's dominance, or is it all just more hype?
Well, my last interview, I talked up the strength of the dollar and how that would always remain, and I could have been really wrong on that one. Maybe my thinking is too narrowly focused because I live in the States,
Hmm.
but my statement has been proved wrong because we continue to see the dollar decline against other currencies worldwide. So could the dollar have found the end of its day in the sunshine, so to speak? I have to say that could happen. And we're seeing that happen in incremental ways that make me have changed the outlook that I had last time. You
Yeah.
have to see the writing on the wall. And when you ignore the writing on the wall, there's still writing on the wall. In other words, I was jaded, or my eyes and my thinking process was being filtered through something that wasn't as realistic as it should have been.
Yeah.
Facts are facts, and we've seen the dollar really lose ground, and a lot of ground, about 15% in value, against the basket of currencies, which include these major currencies you speak of.
Yeah, it's going to be very interesting to watch what happens in the markets in the next, from now at least in the next 6 months till the end of the year. And then we'll see what happens during election time in the US and see what happens in the stock market. But Gary, it's been a huge, huge pleasure having you come down to Wall Street Silver. And of course, always as the market develops, I'd love to have you back. Huge pleasure.
Thank you. I'd love to be back. And always remember, when I'm as bearish as can be, is probably the time to buy it, because I'm not always right.
Absolutely. Talk to you soon, Gary.
Thank you very much. Have a great day.